Good evening and welcome back to the Australian Stock Market Show. I'm going to start tonight's show with a quote from Paul Collio, who said, "A mistake repeated more than once is a decision." Tonight, Dale and I, in our upfront, no BS approach to all things stock market, aim to give you the value of our wisdom so you don't repeat your mistakes in the stock market. If we can do that, then we know you will make better returns. For our main topic tonight, we are going to take a look at the impending merger of BHP and Woodside, and we'll answer the questions: should you buy, sell or wait? We will also give you which of those two stocks we prefer. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello, how are you?
I'm super fantastic.
Because you had a super fantastic weekend.
I had a long weekend. How many states had long weekends?
How many times do you get a long weekend? Not very often.
No, not very often, but I tell you what, drinking and eating too much, I tell you what, I'm tired. Jeez. Socialising with people around my house all weekend is like, we've gone from lockdown city central in Melbourne, with no people allowed anywhere, and now I've had a weekend full of guests.
Awesome.
You know what, fish and visitors stink after 3 days.
Thank you.
So that's what I reckon.
Well,
anyway.
look, I thought it was a good weekend too, and I had the best pizza I've had in ages from, can I give them a bit of a plug?
You can do that.
From the little pizza place in Yarra Glen, which is, as you pointed out, right next to the service station, but I thought across the road from the pub's probably a better way to remember it. Best seafood pizza I've had in a long time.
Yeah, go to Yarra. I went through Yarra Junction yesterday myself, but I didn't stop there for pizza. I must do it next time. Anyway, before we get into our first segment for tonight, again, we'll take some live calls on the show. So if you want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and call us now. The number you need to dial is 0392909988. That's 0392909988. And to get things started, the first person to call into the show right now is going to get a copy of, or free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine and I are super keen to chat to you, and you do need to get in quick because we're expecting a lot of phone calls tonight. So, but get in and dial now.
While we wait for you to call, it is the third Tuesday in the month, and this means we look at the world market. So let's get into the charts.
Now, we're looking at the world markets there, aren't we? That all the major indices, this is the yearly figures, so I want to look at those first and then go to the monthly ones.
Righto.
So what are you seeing?
Well, it's a sea of red, actually, if you're not looking at the first line, which is the Straits Times Industrial Index.
So Singapore's up?
That's actually shocked me. Why is that, do you know?
I've got no idea, but I do know there's a lot of exciting things happening in Asia. I was talking to a good friend of ours who's an M&A specialist and everything in Singapore, and I was chatting to him only about a month or so ago and I interviewed him for our Talking Wealth TV series that we do for Flicks, which is soon to be launched on talkingwealth.com, so stay tuned for that, everybody. That's about 2 months away. But I was talking about that, and he was super excited about what's going on in Asia, especially Vietnam, Thailand, and a few of those other countries like Malaysia and Indonesia doing really well. But he said Singapore's doing great as well. So it doesn't surprise me. He said things are happening. But,
I mean, it's still a small return, but nonetheless it's up. It's the start of the year. FTSE's down.
Yep.
And it's come in second. India, again, in the top of the leaderboard, -3. Then we've got the Australian market. We're not far behind, -4%. It sounds kind of, a bit boring, doesn't it, when we're talking about all these negative numbers? But you've got to have the breather in the market for them to get the good rise out of the market.
January was heavily down on most markets. February was a bit of a nothing month. It went down and up. So it pretty much ended where it started, roughly. But
it could go either way, isn't it, really, at the moment? So the All Ordinaries Index down 4.6%. The Dow Jones Industrial Average, a big gap between us and the US market, down 9.3%. That'd be the tech side, would it, holding it back?
Yeah, the tech's, a lot heavier falls on the tech sector. So obviously the S&P 500. The Dow doesn't have too many tech stocks in it. Obviously Apple's in there, but it's more the S&P 500 has more tech in it. And obviously the NASDAQ is a lot of tech.
Okay. Tech, that's all I heard.
Tech, okay.
All right, S&P New Zealand 50 index -9.43. New Zealand was leading for a while there, and we've seen it drop back as well. The Tokyo 1000 index minus 10%. Europe's actually down 10.64 as well.
Harder, yep.
The CAC 11.5% lower. The Shanghai Composite Index down 11.7%. The DAX is down 12.66%, but the DAX has been incredibly strong over recent years, so I'd say it's probably well due for that pullback. The S&P 500 index, now there's a big difference between the S&P 500 and the Dow, which you'd expect.
Yep, correct.
Down minus 12.67%, and the Nikkei is actually down 13. The Hang Seng's actually down almost 17% in Hong Kong. The Nasdaq Composite's down 20%, and the Nasdaq 100 down 20.
Okay, so a lot of those big tech stocks are the ones that are pulling it down. So
yeah, which tells us that either there's going to be a resurgence this year, or it's going to be huge for that tech sector next year.
Some really big tech stocks in the US have actually crashed, but it's not a broad. It's not. Is this saying the markets are crashing to you?
No.
Yeah.
I mean, look, see, the thing is, when markets pull back, they pull back normally between 10 and 15%. If markets pull back 20%, they usually ring the bell, say there's a crash, and it turns around and goes back up again. That's what happens. But what is a crash really? To us, a crash is when the market escalates on the decline and it crashes at the bottom, not at the top.
It does, and that's what it does. And I think the guys are just telling me in my ear that we've got some technical difficulties. And they fixed it, so we do apologise for whatever. I don't even know what was going on, but they were trying to sabotage you, I think.
Working away in the background.
They're working away in the background.
I'm sure they were helping.
But I'm not seeing anything that's telling me that the market is crashing. I'm seeing normal market pullbacks. That's what I'm seeing.
Okay.
You know, obviously our market's doing quite well.
Yeah, because we've seen over years that it is normal for the market to come back. Yep,
but everywhere you look, whether it's YouTube or blog posts and that, all these people saying the market's crashed, the market's crashing. And I'm not seeing that at the moment. And maybe I'm wrong, I don't know. And then obviously, you know, this time next year we'll figure out whether I'm right or wrong, but I'm not seeing a crash at the moment, especially not on our market.
Yeah, we're seeing an incredibly resilient market.
I'm not saying some stocks aren't crashing or have crashed. So some big stocks in the US have crashed, but the market itself is not crashing.
Okay.
The Dow doesn't look like it's crashing to me anyway. But
okay, fantastic. Well, that is it from us on the world markets. Now it's time to get into our first email for tonight.
All right, our first email tonight is from Mitch, who says, "Hi Dale and Janine, I'm keen to know your thoughts on Northern Star Resources and whether there's a potential for it to reach the $12 plus mark. Now, I purchased this stock on Monday, the 7th of March at $10.71, and I've set a stop loss at $10.20. Now, I'm looking at medium term. A part of me feels like I missed the boat, FOMO, but a part of me feels there's still some growth there, and I really appreciate your thoughts and keep up the good work, Mitch." So let's have a look at this. We had got this email last week. We didn't get time to do it, and I think the next one's exactly the same from last week's show.
Now, first of all, I don't think that he's missed the boat.
I don't think he's missed the boat.
It's coming off a bottom. So what we don't know yet, it looks like it should continue to rise. That's the bottom line for gold, if I was to say that. So I'd have to say that he's probably got in at an opportune time where he's entered.
Yeah.
I don't see anything wrong with where he's bought. I don't see anything wrong with his target, but you know, that is a very short-term target. I'd say there's further upside for Northern Star than just $12 if it does get going.
What about his stop loss? Too tight or about
Well,
right?
look, it depends how he's trading. He did say, what was it, more...
I'll read it out.
It depends on your time frame. If you're short to medium term, that may be okay, but if you're more medium term or medium to long term,
He said
probably
medium
a bit
term.
tight.
He said, I'm looking medium term. So
Yeah, generally you would allow a stock to move a bit more than that, especially a gold stock. It's going to move around and be quite volatile, but it really comes back to what his risk tolerance is as well, how much he wants to risk as part of this.
Well, it is too, but often the biggest sin that people make in trading and investing indeed, but definitely trading, is setting stop losses way too tight because they're fearing the losing, and not allowing. And a gold stock, as you said, needs to have a bit more time, more room to fluctuate and still be right. And I just think this is a little bit too tight.
Yeah,
I really
okay.
do. But
Great.
I do like his choice. I do think, like, I'm agreeing with you. I think it's got more upside on it, but at the moment it's down a little bit for this week, but nothing too much to worry about.
All right.
All right, we do have a caller on the line tonight, Janine, and our first caller is Paul. Hello, Paul. How are you?
I'm very well, thank you. How are you?
Me, I'm fantastic. Where are you from, mate?
Point Cook.
Point Cook, okay, not too far away from us, and it's on my way to my hometown, Geelong. Awesome, love the place. You've got a question for us?
Yeah, I've been watching a stock, IHL, Inconex Healthcare, for a while now. It's a bit volatile up and down, but I thought it was trending upwards for a long time, and today I bought some, but I'm not worried about the low that it broke at about 46 cents a month ago, maybe that it's no longer trending.
So why are you interested in this stock?
To be involved in, I wanted to part my some healthcare in my portfolio, and I had a bit of a sort of topped up on top 50 type stocks, and this was a bit of a specky that I wanted to play around with.
Okay, so you've got a little bit of money in this, not big chunk of money.
No, not a full portion.
Oh, fantastic. Well, Janine's brought it up on the screen, and I'm sure she's got some great comments for you, but thanks for the call.
Thank you.
Look, I mean, it's always a challenge, isn't it, when you're building a portfolio and then you're thinking, I might put something specky in there, but why do people do that? That's my first question.
Well, most people put the speckies in first and think about the good stuff later.
That's a mistake, though. He's actually gone about it the right way.
Correct. He is, and that's why I asked, because he has gone about it the really, really right way. It sounds like he's got a good portfolio, and this is just a little addition with a little bit of money to give it a bit of kick. So what's the intention of doing that, like what Paul's doing?
I don't know. I don't really understand that thinking and trying to... I think maybe the person's thinking, I'm hoping to make it big on this little stock. I don't,
Possibly.
What other
Make
reason
some good
could
returns
there be?
on it, but having a specky and putting a little bit less on it, you're not risking the sheep station.
Look, I know some of the traders that I've worked with over the years, because trading can be boring once you get it going, because if you're just trading on a weekly chart or a monthly chart over the medium to long term, then the decision making doesn't happen that often. You're checking the stocks perhaps daily, and really sometimes, depending on your rules, you're checking them weekly. But for a person who likes action, they'll often choose something that's smaller to put in their portfolio. That's,
well, they'll trade with leverage and everything else.
Yep.
So he's bought it today. So do you think he's got a good entry on it?
I don't like it where he's bought it right now, simply because it's just had this peak here. It's traded all the way down, which shows the personality is all of a sudden could be changing. It doesn't mean it has, but it just looks like, and then it's come up, gone through that high, and then come all the way down to test that low. So that's a big move. It's not showing sort of a bullish sign. It's more, I'm going to go sideways for a while now sort of sign. So, unlike these sort of moves where you're seeing sort of a nice little move, these are just out of character with how the stock's been trading.
Okay, so you don't like his buying, you're not sort of positive on it?
I'm not positive on it, and I'd just be, cautioning him to make sure that he has a stop loss, that's all, and just to be comfortable with whatever decision that he makes on that one.
Okay, well, if you want to be like Paul, give us a call now, 929 099 88. We'll answer your questions too. So that's it for IHL.
Excellent. Our next email is from Mohit. Hi, Dale and Janine. Been watching your show continuously for the last couple of weeks and caught up with 2 months of your content. Love your work. Completed your managed funds book just yesterday. My question to you is about the mining industry. It seems very interesting to me. I've made some money, learned how to read the metal grades, etc. Especially interested in the explorers. What's the best way to trade these speculative stocks? I believe 2022 is all about commodities. Thanks, Mohit. I think he's right.
Which bit?
About the commodity side
About
of
the
it.
commodity side.
But he's looking at more speculative shares. Don't know what his level of experience is to justify doing that.
Well, if he's asking the question, I would assume it's not that high.
Okay, so he's asking what's the best way to trade these smaller stocks?
Get a good education.
What about if he was to trade the small resources, something that replicates the small resources index?
Yeah.
Something that replicates those small stocks on the market rather than trying to.
Well, let me ask you a question. Speculative stocks, are they more consistent or more inconsistent?
More inconsistent, typically.
Okay, so
more likely to give you a bit of a ride on a roller coaster.
So is successful traders, are they better off trading really consistent stocks or more inconsistent stocks?
Well, look, successful traders, if they're short term, they can trade anything. So it doesn't really matter about the size of the stock, but it depends on the stock, the person's experience. And if you don't have much experience, then I wouldn't even be trading the speculative shares. But it sounds like he's doing a lot of research as well. With those small stocks, you need to do research.
But those small stocks, would you trade them on fundamentals or technicals?
Hell no, not on fundamentals, but you'd have to have a combination of both.
So whilst he's understanding the metals, it's going to be. I mean, he's asking us to give him an elephant of how to trade. Like, we're not going to be able to do that in 2 minutes on the show saying, well, this is how you trade speculative stocks. You have to get a good education. If you don't have it, you're going to be like a lamb to the slaughter on these sorts of stocks. So you do need to get a good education.
Yeah, because as soon as good news comes out about these shares, 9 times out of 10 they get sold off, and then people get stopped out, don't they?
I think you need to read my book. If you haven't read my book, read this one. Go and buy it, get it free. Get my other book for free if you just want. Just pay the shipping, my How to Beat the Managed Fund, but read this one. It'll help you out a little bit anyway.
All right.
That's it for that one.
We have another caller on the line, and it's Dave. G'day, Dave. How are you this evening, and where are you from?
Yeah, hi Janine. Hi Dale. I'm from Sydney.
Fantastic. Great to have you on the show tonight. You've been busy up there, or you've been keeping out of this really bad weather?
Oh, it's beautiful weather up here at the moment, so so enjoying a bit of sun at the moment.
Lovely.
So I'm ringing up about Macquarie Bank. I bought into it about $1.80 a week or so ago, and I thought that it appeared that it looks like it's back on the way up and targeted around about $220. And question without notice, what are your thoughts on broker targets analysis upgrade a stock when they say it goes from neutral to a buy, that type of thing? Do you take anything into that?
No. And are you paying for the advice?
Yeah, no, I thought that'd be the answer, but I just thought I'd ask you guys.
Well, why do they call brokers brokers?
Oh, that's not a good
they
joke.
make you broker, I believe.
That's not a good joke at all.
I think it's a good joke. Look, Dave's laughing.
Dave's laughing.
Yeah,
Dave,
yeah,
do you mind if we just ask a question? Are you looking to hold Macquarie medium to long term, or was this a more short term?
It's more of a short term trade. Like I said, I'm hoping that it will bounce back up over the $200 mark.
Yep. Okay.
So,
excellent. All right, Dave. We'll get into it for you.
Yeah. I don't like Dave's chances.
Now, this is an interesting thing, isn't it? Because we can talk about the fact that Macquarie all of a sudden has changed the way that it's trading. So we saw this long rise that happened out of the COVID low.
This is an awesome stock.
Plodding along.
It's brilliant stock.
And the risk now is that it's actually done something that it hasn't done for a long time. So right now it's actually more likely to keep falling than rising until it tells us otherwise.
Yeah.
So Macquarie really, he's looking for a 220 upside, which could happen.
Well, he's saying it'll get over 200, but
but he's right about that 200. It has to get back strongly through that 200 mark for it even to have a chance of getting to 220 in the short term.
I think there's more chance of falling than rising.
Yeah, so you'd want to have your stop loss tight. You know, if it goes below last week's bar, then it could be heading back down into sort of 160 zone.
Yeah, as I said, I think he's probably entered too early, hoping it's going to go because it's gone up. It's gone up obviously this week a little bit.
So what's your motto?
I don't know. You're going to tell me, aren't you? Which one?
The motto is wait for confirmation.
Not speculation, and don't listen to brokers, basically. But we do have another caller on the line, Janine. We don't have Janine on the line. We have a gentleman called Jack. Jack, are you there?
Yeah. Good evening, guys. How you going?
Good, buddy. Good. Where are you from?
From Perth, Western Australia.
Oh, welcome to from lovely Perth. I love getting over there. It hasn't been a long time since I've been to Perth, but I love going. You've got a question for us?
Yeah, I do, mate. You've been locked out for a while, but I do have a question.
I'm Victorian, so nobody likes us.
Well, we're all welcoming you now anyway. So. Got a question, guys, on it's a bit of a speculative company, Sayona Mining, and what I believe is a possible entry point depending on what the stock does the rest of this week. Yep. Possibly, from what I'm looking at, off a downtrend line, and I was just wondering your thoughts on what you think of the stock.
Okay, short, medium, long term, what are you looking at?
Probably long term, I guess.
Okay. Yep. Have you looked at the fundamentals of the stock?
Yes, a few of them, so market capital, and looked into their partnerships with a company, Piedmont Lithium.
Okay, yep.
So, yeah, and been watching it, a bit of volumes trading and stuff. So,
Cool.
nothing huge, mate, but just mainly working on what the chart's doing as far as I'm going at the moment.
Yeah, I'd also suggest look at its earnings. Look at the earnings growth that it's expected over the next 3 to 5 years. So that's what you're looking for there as well, because it's great having all this nice stuff around, but you still need to look at the earnings growing over the next few years. Have a look at that. But I'll get Janine to bring up the chart and have a bit of a chat on Sayona for you.
All right, now, Dale, on
Yes.
the monthly chart,
That's what my mum called me.
on the monthly chart, it's actually setting up really nicely, the best it's looked in a long time. So I kind of like the longer term picture. I think it might have been a backdoor listing looking at the
possibly,
way the chart's sitting there. But we don't know that for sure yet at this point. Looking at where the stock's trading now, I think it looks okay. I'd just be a bit concerned if it heads back below 13 cents.
Yep.
So that would be the point. I'd be watching very closely or selling depending on where your stop loss is. You've got to weigh that up for yourself. Volume sort of dropped off a little bit, I've noticed, in recent weeks. Not sure what's going on there. But the monthly chart looks nice. If that
nice.
monthly bar can close high, that would be particularly good for this stock.
Yeah, look, I'm not opposed to what he's doing on this one. I think I like it, but I'd still be a little bit careful.
Very, very much so. All right, looks like we have another caller on the line. Gee, you're going to wear us out here. We've got Daniel on the line. Fantastic, Daniel, to have you with us. How are you this evening and where are you from?
Oh, I'm good, thanks. I'm calling it from Cronulla.
Cronulla, wow. Oh, look, love that beach.
Home of the Sharks.
That's it.
Both in the water and on the footy field.
Really, is that
Yep.
right? Yep. All right, Daniel, look, you've got a stock for us and a question tonight. Would you please tell us what that is?
Yeah, I know this has come up a couple of times over the past few weeks or maybe even months, but I've been looking at AGL and it bounced above an alert that I had for a price, but then it's dropped back down. Is this? What are you guys' thoughts on it? Do you think it's going to a bit lower to the downside or keep going? Because it's pretty close to like historical support from what I can see.
Yep. I think you're wise to be a little bit concerned right now. So we're going to get into the chart for you and tell you more about it. Was your intention short term or is it more medium to long term?
Given this stock, I would probably say longer term. Like I'd probably be looking to hold it for as long as possible.
Okay, mate. All right. Is this the first stock you've ever bought, or is this you've bought others before this one?
No. I've had a few others. I just recently got out of Fortescue as well.
Okay, mate. Well, great. All right. We'll check out AGL for you. All right. Look, I can see his concern.
Yeah,
the last 3 weeks,
too.
it's done nothing. It's triggered some entry for him and on the move up, but then you can see it's struggling around that level you've identified there at 762. It's really trying to get through that. But the risk right now is that it could pull back below, about 680, that low there.
Yeah.
Whatever that low is there, it could take that out. And if it does take that out, the problem is it could keep falling. So this is the problem, isn't it, when stocks bounce off their lows? You've got to try to get in there to get an opportunity when the stock has enough momentum behind it or gives it an indication it's going up. But then you've just got to be prepared to have the stop loss there. It's part of trading.
Yeah. It's not unusual for seeing a stock that's fallen for so long, and we're talking about multiple years here, for it to do what we call a dead cat bounce, where it just goes back down to where it was and goes up again. So
you love to throw that one in.
A little bit early. Well, I don't know.
I don't think we want to be talking about dead cats. Well, Dad, it's time that we get into our main topic for the night, and it's about our favourite area of the market, which is the top 20 companies. In particular, we're looking at a hot topic at the moment, and that is the decision to merge the Woodside with the BHP's petroleum business. I'm quite excited about it, as the merger is really significant for investors for 2 reasons. Firstly, it will not only change the makeup of the biggest company on our market, being BHP, but the move will create a global top 10 energy company, the largest energy company listed on the ASX. And according to the big players, will enable the merged companies to satisfy Australia's changing energy requirements.
Indeed. Now, most importantly, this merger will affect a lot of investors, as there is a high probability that you may hold at least one of them in your portfolio. So it's really important that you can answer a number of important questions for yourself. Now, if you currently own at least one, then the first question you need to answer is, should you simply continue to hold that? If you only hold one of those two stocks, then the second question is, should you buy shares actually in the other company or buy more in the company that you already own? Or is this merger the perfect situation for you to sell and take some profit?
These are all great questions, Dale, and I'm sure that everyone watching's wanting answers. So we will get into this and take a look at the charts to examine the opportunity for growth and income within the next 12 months. Dale's also going to share which company he prefers and the one that's likely to outperform in the future. There's a hard one for you.
Good. I am happy to do that, but before I give my preference, what we do need to share with everyone regarding this merger.
Most of you would be aware that BHP and Woodside have already signed a binding agreement to merge BHP's oil and gas portfolio with Woodside. The process is scheduled for completion in July. However, the merger, of course, is subject to a number of approvals, so continue to watch the websites of these two companies for updates. The plan is for the merged company to be owned approximately 52% by Woodside shareholders and 48% by BHP shareholders. The new Woodside shares will be distributed to BHP shareholders as an in-specie fully franked dividend.
Now we see the move as giving investors a clear choice. Now some investors want to invest in petroleum and gas and others simply don't. So the move makes it much easier for you to understand what you're investing in. Those who decide they don't want to hold companies with petroleum assets will sell them. More investors may choose to own BHP shares because they have demerged the petroleum business, as this better prepares BHP for a cleaner future. Now, BHP has come under a lot of criticism from shareholders about its exposure to this area. Woodside, on the other hand, is considered to have improved its growth potential from this decision.
There is also constant talk about the need to meet global energy needs as the world transitions to cleaner solutions. The combined business is reported to have a high margin oil portfolio and long life LNG assets, and this should mean the company continues to be profitable as the new Woodside contributes to the global energy needs over the coming decades as the world makes the transition.
Indeed. Now, whilst for some investors the choice is clear depending on their preferences and the views on the petroleum businesses, we do now have two businesses that both are very different and provide potential, provide potential for investors. Now, I really do appreciate this. Now, let's have a look at the charts so we can really sort out which one's got the best potential and what people should be doing.
Yeah, look, if we look at the charts now, we can look at the BHP chart. As we're looking at it, though,
I hate doing that.
Yeah. As we look at it, though, I really want to talk about a few things. So we know it's going to improve BHP's position in the views of a lot of fund managers that are looking for those companies that don't have those petroleum assets. So there could be a lot of uptake in BHP shares on that basis. But do you think the average mums and dads are going to be focused on that, or do you think it's a select group of people?
Look, I don't think mum and dads
climate?
are going to be as focused on that because they like holding BHP anyway. It's been one of those stocks that ever since I've been around the whole concept of investing in the stock market, people wanted BHP in their portfolio. Grandmothers bought it and great-grandmothers bought it, and they just kept accumulating it.
And a lot of financial advisors suggested that people have BHP in their portfolio because it was one of the biggest companies. At one stage, it was the biggest company. Commonwealth Bank took that over, but now BHP may end up being the biggest company with the unification of its shares from the UK to Australia. So it could be back on, it looks like it'll be back on top as number one again. So that would really help BHP. Yeah.
You know, BHP has a huge amount of potential. I think now it's divesting that and it can focus on what it wants to do.
But Woodside's getting a bit of a windfall, you'd have to say, with the current earnings that come out of the petroleum side of the business.
You've made it super, super hard for me. So if I own BHP right now, I'd still be holding that. I really would.
If you're a long-term investor.
If I'm a long-term investor, I'm not too worried about this stock. I'm still seriously would be holding this long-term. Short-term, maybe a little bit of short-term weakness, but I think, you know, long-term, I think this is really, really good.
Yeah, because I guess the risk is that it could fall, and we don't know in the current climate. You never know what could unfold. Stranger things have happened, and we just have got to keep an eye on that next low that comes in. So BHP needs to pull back. It's doing that now. But I'd expect after that we'll see whether it's going to continue to rise above $50 in the short to medium term or whether it's going to take a bit longer for it to do that. But if you look at this stock long term, it's just amazing where it's traded to. And you'd think, over time, while it's the trajectory of this share, it has its ups and downs and it will continue to do that. But it should continue to rise over the long term.
Oh, it will be, because people look at a chart like this and they see these areas and go, oh, geez, it didn't do too much for a few years. But when you take all that out, you have a look at it. It just looks magic through here. This is phenomenal, this stock. How
the preference, though, is not to be in it when it's making all of this sort of nonsense, because historically these mining companies didn't pay huge dividends, and so they'll go back to that point again where the dividend payout ratios will be a lot lower. So when we go back into that climate, it's more about the growth, put the pedal to the metal. But right now, it's not necessarily going to be great for short to medium term investors. And let's just have a look at why. We'll just come back there. Are you a bit dizzy yet? I just took you on a bit of a ride. We can see there that this week is down. So until BHP gets back above the high of this week, which is let's say $48, it's got to get back above $48 really strongly, close high for the week, and then it's got the potential to keep going and challenge that high there. But right now, it's looking like it's heading down. And if it continues to do that next week, then just be patient and wait, because there'll be a better opportunity in BHP.
I think with so much uncertainty around the world, then you're going to have a bit more of a holding back of a company like this. But when we get back into an expansionary phase and a rebuilding phase, this company is likely to do very,
I don't think it's just that. I think it's also the fact that we've got this change happening with the stock. So when that happens and there's a bit of uncertainty around all of that in the marketplace as well, I think that will then, once all that settles down, I think that we're more likely to see clearer direction from BHP shares. But when you look at this and 10 years down the track, what's BHP going to be worth?
It'll be worth double, triple that, pretty much. So right now you're a BHP shareholder. Okay.
I think that if you're a BHP shareholder, you're not necessarily going to go out and buy more right now.
Don't buy more.
If you're a long-term buy and holder, then maybe that's different. But if you're trading the stock and you're looking to gain a return in the medium term, the decision would be just to wait for a better opportunity once the momentum's behind the stock again.
So if it does fall short term?
Yep, and look at this, some investors don't want to receive these Woodside shares necessarily.
Some probably might not,
Yeah, so that might be another complication to their portfolio. Maybe they think it's a good thing. It just depends on what they're being told to an extent as well about the
So long term,
stock.
ride it out, whatever's going on.
Long term, ride it out. Medium term and short term, wait.
Maybe get your powder dried already, buy if you're not already in it. If they're not in it, people wait for it to pop back a little bit.
I think that's a really
dry
good
and get into it.
Summation of a good stock who's going to be number one on the stock market. Now, Woodside, the interesting thing about this one is that there's a lot of fund managers that are going to have to pick this up.
They will, absolutely, because it's going to get bigger. That's the point. And so it's going to be taking more weighting in the index, so they're going to have to buy it, aren't they?
Yeah, correct. So that's an interesting thing from Woodside's point of view. At the moment, we're seeing a little bit of short-term downside. I don't think that's a big deal for Woodside. I expect that Woodside's likely to continue on. Could be a $44, $48 stock going forward, I think.
It's done so well, haven't it, since this announcement?
But it can be quite volatile, so it's not for everybody. People think, okay, buy the top 20 shares. There are stocks in that top 20 that some investors are better off steering clear of just because of the volatility may not suit them. So that's something that you have to understand when you look at the chart.
So obviously the market really likes Woodside, because when the announcement was what? Ages ago.
Well, short to medium term, this is a big thing for them.
It's doing so well. So if you're not already in Woodside, would you be getting into it now?
Look, I'd say if you're in an existing position, you'd be watching to see if you can add to that. But if you're not in Woodside at this point, I'd just wait a couple of weeks. You need to see it turn around and come back up again. And if it does that, then I think that there could be a really good potential, could be 20-30% upside from that.
Okay, so that's short term?
That's short to medium term thinking.
Short to medium term.
Long term, if you're wanting to get good energy exposure, then this is the stock to be in, isn't it?
Oh, well, it'll be because it's what's happening now is it's with this whole merger that's going to be happening, it's going to position itself for the next 10, 20, 30, 40 years.
Now, look, you've got to think about what's happening with the targets, with the climate science and everything. Yes. I don't think, who knows, there could be question marks about the stock. So I really wouldn't want to look that far out. You know, I'd be looking sort of 5 years out at this point to see what happens. The world may escalate its decision on changing to renewables. You just don't know at this point.
Well, I mean, that was sort of part of my question is this company, is it going to go big into renewables?
It's got the money.
It's got the money. That's what I'm saying is what is it going to do? I mean, obviously petroleum or petrol is a finite resource, or oil is. We're moving away. Europe's not going to have internal combustion engine new cars by 2030.
Yep.
I think it is. So we're going to have less of those. We're going to have more electric vehicles. Hydrogen obviously is one of those dark horses in that space, in the electric vehicle space. And I won't say it's a dark horse, but I think there's some pretty cool opportunities in the hydrogen space for that. But in terms of our general energy consumption needs,
Well,
gas, oil.
they're saying that this could be transformative for it.
Could be transformative for it.
I mean, Woodside could become one of the most exciting companies in the future, as you say.
That's what I like. That's what I'm thinking. And that's why I'm a little bit torn between BHP, Woodside. You know, long term, I just love BHP. I just think it's a great stock. If you're looking 5-10 years plus, BHP is a hard stock to go past.
Yep.
It really is a hard stock to go past. Short term, I can probably go past it, but more short to medium term, Woodside's looking so nice, you know, and I'm thinking, wow, you know, that's a great stock for your portfolio. I think from right now, I think it might have a little short-term weakness on Woodside, and I'm talking only maybe weeks, maybe a month or two max, but then it'll be a really good opportunity for the rest of the year. I think it'll be a good one. So, yeah, I think me coming up with a preferred choice is a bit hard.
Yep.
You know, it's like, it's not, I'm almost not comparing apples with apples, if you know what I mean, but I do like both of them for two different reasons.
Look, I'd say short-term players, it's good to take some money off the table and then just wait for that move, as I said, and Dale's talking about, to put some more money back into Woodside. What would you say about that?
Look, I'm happy with that. I really am happy with that. And as I said, you know, with BHP, just keep your powder dry and get ready to strike, because if it does come back, you could be picking up a good stock at a slightly better price. I think the market's a bit weak at the moment, but I think everything will go back to being normal and doing really, really well. But obviously July is the crunch when it does happen, and to see how it all washes out over that. But right now the market is looking at Woodside positively based on its price action since the announcements happened, which is more than weeks ago. I can't remember when I did my first podcast.
Well, when they started talking about it, it was August in 2021, I think, around that time.
Ages ago. So it's like, so the market obviously likes the whole idea. So to me, I think short-term Woodside.
Okay,
That's
beautiful.
my call. So pretty much, I think that's my summary, isn't it?
Yeah, I think you've done well.
I think I've done it all. So short-term Woodside, long-term BHP, just go with that. How's that?
Well, I think that sums up all of our comments there, so I hope you got a lot out of that.
All right. Well, that's it for our major topic for tonight. Now, before we do get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. Now it's time to get dialing. The number you need to dial is 0392909988. That's 0392909988. So get dialing now, and Janine and I will take your calls.
While you call us, we will get into answering the next email. So call us now.
You've been texting too much. It's an emo.
Our next email is from Kent. Hi, team. Thanks again for all of your content. I'm hoping to hear your feedback on my position in the company Immutep Healthcare. I bought it at 23.1 cents and it demonstrated great growth. Recently, it's seen its challenges, seems very volatile. My only goal is to maximise profit on this stock. Happy to hold if there is upside short to medium term. I look forward to hearing your feedback, Kent. Thank you very much for your question. All right. Let's get into Immutep.
You know what worries me?
What's that?
He said this statement, and my only thing is to maximise my profits on the stock. When somebody says that, what normally happens?
They're going to get a loss. So you think he's holding? And
well, the best strategy to maximise your profits would have been had a better exit strategy on this stock.
True.
Because he's bought it at 23 cents down here and got it reasonably near the low. I mean, obviously the low's down to 11 or 12 cents, so he's bought it in a reasonable move already are, but he's already lost a shed load of money and he's trying to maximise his profits. So it fell 55%. So right now, there's high probability it's going to fall right back down to where he bought it.
Are you trying to be an Aussie?
Bought it, yeah.
You said down here.
Down here.
You know, ear?
Right.
Isn't it here?
But I am an Aussie. What do you think I am?
Okay.
I know I'm a Victorian and they tell me I'm a Mexican, but I don't speak like that.
All right. So look, I mean, with all credit, I think that he bought at a really good time.
He did. He bought at a great time. But was that a guess or was that a smart strategy, a good strategy that got him into that?
Well, the stock had started trending up to me. That
But
looked
not
really
having
good
an exit
off the
strategy
bottom.
killed him.
It has, because the stock's been trending down so strongly. And I think it's more the type of stock that's the big issue here, because when you're dealing with these low liquidity shares, that your risk is so much higher and you can get mesmerised by all of the great stories that come out about these shares, and the next minute you're looking at the stock and it's down 40% from where it was. So,
Yeah, so to me it's like when somebody says I'm trying to maximise profit, any trader that tells me that we're teaching, I say get that out of your head straight away, because trying to pick the bottom and the top, like those bottom and top, it's almost
so you say just take a
non-existent.
profit.
Take a profit. When
But
you get
right
a good profit,
now,
take a
the
profit.
stock could be bottoming out. That's the thing with this share right now.
It could be.
It could be, but how much more do you want to risk? That's the question. You don't want it to head back to where you've bought it. If it goes through last week's high, I think there's a chance that it could head back up to around 43, 45 cents in the short term. But it has to get through that high to be able to do it.
If it does that,
If it falls, like whatever the low of this week is, if it falls below this week's low,
it's gone.
it's in trouble again, because it looks like it might come back further.
But if it goes above here, like you're saying, and it starts to move up, then there's going to create this whole false sense of, all right, well, I know if it keeps getting up here, then I'll sell. If it gets up to here, I'll sell. If it gets up to here, I'll sell.
Yeah, but it
then
could
that
just
falls
be a
over
rhythm
again.
of the market that
Yeah.
it's then starting to make the next move up.
You get the
But
point.
what you're highlighting is the fact that you still need an exit strategy
need
when
an
it
exit
does
strategy.
move up.
Cool.
So,
Yeah.
and there's stacks of actual exit. I can see on the chart
Tons of
now, there's the rules that we use, there are plenty of
Tons of
on
them.
that chart.
Okay. If you do want to give us a call, remember the number to dial is 0392909988. That's 0392909988. I know Janine would absolutely love to have a chat with you and ask you some questions of what you're doing and the stocks you'd like her to analyse. So please pick up your phone now and give her a call. You'd like that, wouldn't you? Yes, you would. Cool. But now we have another question, and moving on, we have the question from, I think it's called Felgun. I think that's your name, who says, hi, Dale and Janine, great to be in touch with you via email, and also being a fresh subscriber to your podcast. Keen to get your thoughts on Grange Resources. I have accumulated it in the last 2 years, and now at an average price of 60 cents. The company's fundamental and dividend policy are surprisingly good, and has had quite a decent run recently due to the increase in the iron ore pellets price. My question is about concentration within my portfolio. The recent rise has increased its concentration by up to 50% in my portfolio. Should I continue to hold it or diversify to another investment opportunities? Many thanks, Felgun. I'm going to answer that really simply.
What's that?
Well, if you look at Berkshire Hathaway, who we talked about last week, right?
Now you're going there.
I know, I'm going back there. Going back to last week's thing.
Why are you doing that?
Well, because Berkshire Hathaway holds 50% of its portfolio
Are you
in Apple.
trying to say that this stock could become a Berkshire Hathaway?
No, I'm not.
Why are you putting a parallel then?
Because it's Apple's 50% of their portfolio. He's saying that this is now 50% of his portfolio.
Right.
Should he be worried? If Buffett's not worried about holding Apple, why should he be worried about having half his portfolio in one stock?
He
If
should
it's
be
grown-
worried.
If it's
in my
grown
view.
to that much in his portfolio.
Oh, if he's in profit, is what you're
Well,
saying.
it's what he said. He's been accumulating at average price, so he's well and truly
Yeah.
in profit. So I don't have a problem with that.
I don't either. However, in the short
I
term,
hate the howevers.
Jeez. In the short term, this share is likely to pull back. That's all I can say, or trade sideways for a couple of reasons. One, it's traded through $1.
Yep,
That's
good.
weird.
That's excellent.
$1 line, right? It's in one sense, it's excellent, but on the other hand, when stocks do that, often they get sold off, which is what's happening right now, and that's because different fund managers start looking at shares once they get to these sort of levels.
Yes.
There is a gap on that chart. Now, I know with big stocks, gaps don't matter as much, but on little stocks, they do. Oh, you want me to show them?
Well, you're talking about stuff, but
Why are
you
you
just...
pursing your lips?
Hey? Just show them the chart. So they know what you're talking about.
Okay.
They're sitting at home going, come on, Janine, show me what you're doing, and you're just talking away and not showing them.
All right, so the risk is that it could come back and fill that gap. Short-term volatility, okay? That's the problem right here. So we're talking about percentages here. So 50% of his portfolio, if it falls back here, that's about 30% downside. So that's what you've just got to appreciate. From there, you're right, it could keep rising, that's a possibility, but who's to say? So I would actually just take some money off the table if it was me right now with that nice position there, a nice profit, don't be greedy. But you were alluding to when you sort of, your eyebrows raised when it went through the dollar, that it could keep going because of the fact that it's already broken through it once, it could take off and go through it again, and then it would end up on the radar of a lot more people. So that's what you're alluding to, isn't it? But I'm more likely to say the bird in the hand's worth two in the bush and take some money.
Well, that's fair enough too. But I mean, to me, I don't have a problem with saying that as well. But I think the gist of the question is the financial services industry tell us to rebalance all the time, right? Oh, you got to reduce your weighting in that and put it over there. And I've had clients say to me, look, I've got all these shares in BHP and they've grown and grown and grown, and now they're a big chunk of my portfolio. And my advisor's telling me to sell some, to buy something else. And I go, why would you sell something that's going up to be in something that you don't know is going up?
If it's going up, yeah.
Well, it was. That's how clubs have got that big in their portfolio. So it's just dumb strategy by the financial industry. They have to do it because it's in their mandates, and what they look at is, well, 1/3's going up, 1/3's going down,
that's
one
their
sideways.
risk equation, which is different to the way that we look at risk.
Yeah, people don't have to do that. Individuals don't have to do that. So it's just, Buffett doesn't do it because he doesn't believe in all the crap that the financial services industry do either. So I think follow Buffett. That's what I reckon.
All right, excellent.
Give us a call, 92909988. We're champing at the bit to take your call, so pick up your phone now and give us a call. Now, we have a question from I'm getting the hard ones tonight, Janine. Thivyan, hopefully I've said that correctly. Hi, Dale and Janine, can you please have a look at ANZ and comment on whether it is starting an upward trend at the moment? I recently bought the stock at $25.80. I've seen it recently bottom out, then start to jump back up. Fundamentals look okay on it, and my prediction is it may reach back to the resistance level between $29 and $27. By the way, I'm looking to invest over the medium term. Appreciate any comments on it. Keep up the great work. Regards, Thivyan.
Interesting. Now, we've talked about ANZ a number of times.
This stock.
It is lovely, isn't it?
I think you keep telling me it's my favourite stock.
You did pick it as your favourite stock at one stage.
Yeah, a little while back.
And you beat me because I picked Westpac and that went down. So look, I'm happy to admit that.
But you get more right than I do sometimes.
Oh, thank you. And now I'm picking ANZ.
There you go.
So look, we've got this really nice level. I'm a fan of this stock now, and I just think he's right. I think that there's a real probability for it to trade back into 27, which it already looks like it's doing. Look at the long-term picture for ANZ though. It's trading at levels it's traded back
20 years ago.
20 years ago.
Yep.
Yeah, so same share price, which just seems odd to me.
Exactly why we teach don't buy and hold.
Yeah, that's right. So looking at it now, I think it could be the low, given that pullback that we're seeing in the reversal. If it stays up for the month and then continues to go up next month, it could be a very good sign for ANZ. Let's have a look at the weekly and have a look at some of the levels that was being talked about. And by the way, if Dale does pronounce your name wrong, can you ring up the show and just tell him?
Yeah, just ring me up and tell me.
Okay, so 29 and 27 we're talking about here.
Everybody should be called Bruce and Dave. It's easier.
Yeah. Looking at it now, if it trades below this week's low, I think we've got further downside. It's as simple as that. We love it when stocks actually trade down to almost to where we're expecting, because then we know if it keeps going lower, we just wait and be patient. If it keeps going up, and I'd actually want to see it get up around these sorts of levels to confirm that it's got strength. You know, I wouldn't necessarily be wanting to try to pick bottoms like this. It's too risky.
I wouldn't be wanting to do that either, but it does look really good.
We had a caller who tried to do that with Westpac, remember? And unfortunately learnt the hard way there. In this instance, he's been luckier, or she has been luckier with ANZ, simply because it's held up better because of the buyback.
Yeah, correct. And it's not unusual for people to make mistakes. The reason why I put that quote into the start is because it's so often we see people make mistakes and then they just keep repeating the mistake. Now, making a mistake once is okay, but continue to do the same thing. Making a mistake is, doing the wrong thing, isn't it?
So it's not following rules.
You're
but
not
if you
doing
don't
something
have
intentionally.
rules,
It just turned out to be the wrong thing. You just intentionally did it
because you didn't know.
because you didn't know. But then if you keep doing the same thing, then how is that a mistake? And we see, and I don't know how many times I said it on my report yesterday, my market report. The week before, somebody asked me a question, and I said, "Look, it looks like you definitely sold with no rules, but I get the feeling you didn't buy with rules." And they came back and said, "Yeah, you're correct." But then when they came back, they said, I think it was on BHP, they said, "Oh, it's dropped away for a few days, I might buy back in again." So they were going to repeat exactly what they did the time before. Now, I said, I'm not having a go at the person, but why do the same thing you already know is wrong?
That's right.
And I did read some of the...
I can tell you why I think it happens. And look, and I'll give you an example of one situation is where people try to pick stocks catch a falling knife.
Yep.
They try to pick it while it's falling and hope that that's the bottom.
Yep.
It's because in a lot of cases they will have done it, before we hear about it. And they might have been right and made some money out of something, and then that sets them up for that failure down the track.
Yeah, but the analogy
taking
I
that higher
use,
risk.
I 100% agree with you, and they do that. They make money on mistake, and then they just keep doing it again. And the analogy I use, you can drive through a red light, and you may not get hit. But the probability says you're going to get hit if you keep doing it. You think, oh, I did it once, I'm not going to get hit a second time.
That's right.
Well, that's pretty stupidity, driving through red lights all the time, isn't it?
Yeah.
Because you're going to get hit.
Yes.
And so in the stock market, when you get hit, you're going to get slammed sometimes and lose a lot of money. And we've seen so many people lose a lot of money by continuing to not learn their mistakes. Now, as a society, we don't learn from our mistakes either.
Well, the GFC is actually a really good example of that, isn't it? And this is where people have to really pay attention over the next few years, because down the track, human nature is an amazing thing, and they repeat. The cycles repeat over and over again. So we may not see another GFC exactly like we saw it, or probably we won't, but we will see the market correct to the same sort of degree down the track again, and it won't be... it could be a few years away, could be 5-6 years away, that we're not that far out from that. Enough time to make some really good money. But, you've just got to be aware and not take your eyes off the ball completely.
Well, FOMO causes so many mistakes, doesn't it? On that, people saying, "I'll just buy the dips." Well, when do you know it's not a dip?
Yeah.
That's a pullback, and you get caught in it. I mean, people are like that sort of stuff. And people, I bet they do it again because they buy the dip and then they get it right, and they go, "Well, I'll do that again."
We got it wrong, I'd have to say, with the COVID pullback, because we thought that there was going to be a dip and the market was going to rebound, and then we get another pullback if it was going down, or it would turn back up.
No.
Didn't happen like that. Will it happen the same way again? Probably not.
Probably not, maybe not. But, anyway, but it is, to me, it's an interesting stock. I do like this stock. I think it is something that, people should be looking at getting into themselves. They really should be looking at it for themselves. Any other bank you like?
We've got another person on the line. Did you want to talk about this any further?
No, I'm finished with ANZ.
Thanks. I think ANZ's a great stock, so keep watching this space. We have another interesting caller on the line. We've got Matt. Hi, Matt. How are you this evening, and where are you calling from?
Good, thanks. I'm calling from Central Coast, New South Wales.
Oh, it was a bit soggy up there, wasn't it?
You love the Central Coast, though, don't you?
I do love the Central Coast. I got friends up on the Central Coast.
Yeah, and are they okay?
Yeah, they're all okay. They all got a bit waterlogged around them.
Are you
Some
okay,
have lost
Matt?
internet.
Yeah, I'm good. It was no rain today. Got the lawns done, so...
So you didn't get
nice.
affected by all the rain?
Oh, we got a bit of rain, but not in my area.
That's
no floods or
fortunate.
anything, so all good.
That's
Well,
good.
you're well positioned.
Beautiful
then.
area of the Central Coast. I love it. I love going up that way.
All right, Matt. So you've obviously got a question for us tonight and a stock. What's your question, please?
Washington H and Sol, big downtrend, and I don't own the stock. I'm just kind of waiting for an opportunity to get in. Just kind of wondering how far has it got to fall. Do you think it'll go through around that $22 mark, and could it possibly go down to 18 even?
Yep. Love the fact that you're being patient and waiting. And what's your trajectory in terms of your long-term picture, short-term, medium-term? How are you thinking about this one?
I'd look to hold it for long-term because I think it's a good stock. It increases dividends every year. But yeah, I just kind of wanted some what you guys think on it, really.
Okay.
I'm just kind of waiting for confirmation that downtrend is broken, but I don't really know how far it's going to fall. It just could keep falling.
Yeah, that's true. That's the problem, isn't it? I had a look at another stock today, which may come up on someone's radar, but I just can't believe some of these stocks that are in these long-term declines right now. So good that you're keeping an eye on it, and we'll get right into the stock for you. So thanks, Matt. Sol Patterson, Washington's Sol Patterson.
I'll let you answer this because I actually talked about this yesterday on my report.
Well, you've got to tell me what you said. I haven't
No,
had a chance to
I want to
watch
see
it.
that you back me up on it. I'm making sure
I
that
might say something
this is
different.
your
Here we
test because
go.
everybody who's watched yesterday's report is going to hear what I said, and if you
Right.
check it to see whether we agree or not.
Look, I think
It's a
that it's
test.
just coming back to the long-term angle of the trend. So the first thing I'm looking at is this long-term picture of the stock.
Yeah.
Now, I think he's super wise in waiting for this correction to occur. And the first thing I'd do is have a good look at when it's corrected, how far has it done? So it's pulled back 47% there.
It's done a big one. It's done a big
It's
one.
done
here.
another big one, 40%. Oh, I've just got crazy there.
It's 38,
Yep.
roughly.
And in the past here, people are probably thinking, why do you go back so far? Well, that's top secret. We can tell you about that when you come and study with us. So here we go, 62%, and that was way back in the 90s. So typically it looks like around 40%'s, something that you would expect to see on the stock, and it may have actually been a bit lower there. The low there was actually a fraction lower. So it looks like 40% is probably, so it may be over. The pullback may have
Maybe,
finished in the short term. We may see
Getting close.
it come back up, but we've got no sign yet on that monthly chart that that low is finished because it's still trying to push lower. So I guess I'd be just having a look at that weekly chart. You really need some good rules, trend line or some good rules as confirmation that it may be going up first. I would actually prefer to see it come down to around these levels, around $23
Me
first.
too.
Yep.
Yep. So stay out for the moment.
Okay.
So
All good.
I think we agreed, I think. If I remember. I have to
Fantastic.
go and watch my video again. Cool. All right, that's our next email is from Craig, who says, "Hi, Dale and Janine. I really enjoy your show and find it very informative. Keep up the good work." Thanks, we will do that. Now, I'm interested in your thoughts on Magellan Financial. It has pulled back a long way recently around a lot of negative publicity, but is now showing a PE of about 6.5 and a dividend yield of about 14%. Has it been oversold and now representing good value? Thank you, Craig. Really good question on this one, isn't it? It has been sold off. It's been in the worst sort of stocks
Yeah.
for the last few weeks, actually.
Now, it's interesting, isn't it? So when a PE falls really low, should people initially think, right, it's time to buy in?
No,
Why is that?
because that doesn't really mean a lot. PE is historical anyway,
Okay.
but it doesn't necessarily because the dividend yield goes right up. So the PE is not necessarily something I would rely on when the stock falls
Nor the
heavily.
dividend yield,
Nor the dividend yield.
because the company can turn around and say, look, we're not paying
We're
out
not paying
that.
it, yeah. There's a reason why it's fallen this heavily.
Yeah.
So,
So look, I mean, in the short term, looking at it, I think there's a possibility it's very close to its bottom.
could be.
Looking at the fall, we've seen 80% to the downside. Now, it could go 90
Yep,
as a
it could go
possibility. 90% would take it down to, let's have a look and see where that looks, 89, 90. I don't see that happening, but it doesn't mean it won't happen once the
But of
stock's
the
in
total
free fall.
fall, basically what you're saying is it's done most of the total fall. It's
I think
likely
it's
to
done
have.
most of it.
You know, I had
Yep.
a laugh this morning because with our market wrap went up yesterday, and somebody says you can't predict the market. TA, you can't predict the market, and your charts are historical. I just had a smile on my face and laughed, and I went, you just don't know, do you?
Don't know what you don't know.
You don't know what you don't know. And it is, and the chances of this hitting close to 90% is exceedingly high.
Yeah.
And bouncing from there, isn't it? So
So
look, let's predict the future, Janine.
Okay, let's do that. Okay,
But
so
we'll
looking
keep the
at,
secret to ourselves.
yeah, looking at the stock now, it's looking like we're getting some spike volume in there. So that final little sell-off could be happening. We don't see this week. Obviously, it's an early part. It's only Tuesday.
It's only Tuesday, isn't it?
Yeah, so we really need to see it get up strongly towards the end of the week. But even if it turns up strongly towards the end of the week, it's still way
It's
too
way
early
too
to
early.
tell.
This is
whether
weeks
this
and
is-
weeks away
yeah,
before we pick a buy on it.
That's right. The trend's still strongly down. I'd be really patient on this one. Is there anything else you want to say?
No, I think you've nailed this one. I think you've done a really good job, but just sit back and be patient.
Excellent. Our next email is from Hazel, a lady. Hooray. Hi, Janine and Dale. I regularly watch your programs and have both of Dale's books and find everything informative. Thank you. I've been watching Linus Rare Earths since about 2015, mostly because of the importance of the product. It has risen steadily over time. It has a huge EBITDA and PE and growth earnings for the next year. Since gaining some information from your books and programs, I've been trying to find a trend line over the monthly and weekly charts, and every time I think I have one, it messes it up. I am thinking of investing over the medium term about once a year, but I cannot find an entrance point. Should I give up? Hazel, do you think she should give up?
No.
Okay.
No. And when a stock's so bullish like this, if you're looking for a downtrend line, she didn't say down or uptrend line, but a downtrend line, when the stock's trending up quite strongly, you're not going to get one. And I know between 2003 and 2007, we couldn't get trend lines on anything.
That's right.
Any good stock, so you've got to use other rules to get into them. But it didn't mean we're not getting out on trend lines, and this follows a trend line underneath it pretty well for a good trailing stop loss.
Yep.
So I like it. Do you like it?
I like Linus, however, right now I would say
It's probably had a big
short term
run.
to the downside. So far this week it's been sold off strongly. The risk is that it takes out this low. I think it's probably wise that she's not in it at this point, given that it's more likely to come back. If it takes out that low, just sit back.
Just sit back and wait.
Hazel, and just wait. If it comes back, it could come back somewhere between 7 and 750 if it does keep falling. But if it keeps going up and it gets back above this recent high, then the chances are it's more likely to rise at least 10%, 15%, and could keep going. So, knowing these types of stocks.
This is why we've got a lot of other rules other than just trend lines to buy.
But would a trend line be good to sell the stock?
Yep, absolutely.
Okay. Okay, well, that is our thoughts on Linus.
Now, if you called into the show and you missed out on us answering your questions, then watch our show next Tuesday between 7 and 8 p.m, as we'd love to chat with you. If you are not able to watch live, you can also email your question ahead of the show. You can do this by sending your emails to info@wealthwithin.com.au. Remember, you need to include Wealth Within Live in the subject line.
All right. Also, we would really appreciate your support for what we share each week. You can simply do this by subscribing to our channel. So if you've not done so yet, please hit that subscribe button now, and also give the show a big thumbs up. Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all of your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we hope you have a great week. But for now, goodbye, good luck, and good trading.
Bye for now.